So, should you buy now or should you wait? This is the most popular question I get that a lot of people are asking at the moment. Rates are the highest they've been since the 90s, and I think everybody's under the impression that they're going to wait for home prices to drop, for interest rates to come down, to make housing more affordable, and I get it. Housing prices have jumped over 15% each of the past 2 years in some areas. That's crazy. Interest rates have over doubled in less than a year, and in turn, it's making monthly payments edge into the range of just unaffordable. So the idea of waiting to buy a house, it's something that I can understand, but at the same time, there's a cost to waiting. There are pros and cons to waiting to buy a home, both of which we're going to talk about in this video. Right now, it seems kind of like the consensus is to wait to buy until next year because mortgage rates are now over 7%. And that puts pressure on demand, causing it to slow to the slowest pace since 1997. On top of that, we're seeing mortgage applications drop because interest rates are now at the highest level in 20 years. So the idea of waiting for home prices to come back down and interest rates to come back down at the same time is one that a lot of people are hoping for because it makes housing look more affordable, or is more affordable. However, when you dig into the real numbers, which we're going to talk about here in a minute, you will see what's most likely to happen. Now, the real question is, can you actually get house prices to come down and interest rates to come down at the same time? We do know that interest rates tend to follow inflation. So as inflation goes up, interest rates go up. As inflation comes down, interest rates tend to come down. So at the same time, when interest rates rise, house prices typically go down. And usually when interest rates go down, house prices tend to go up. They are inversely correlated. We saw this in 2020 with interest rates. They went down to a new historic low and fueled demand because it allowed so many more home buyers the affordability of a home. The low interest rate combined with low inventory resulted in the big surge in home prices. Now, as interest rates have gone up, we see housing slow because housing affordability becomes more and more of a problem. What they could afford last year is no longer possible, and at the moment, I see why people are sitting on the sidelines, scared to jump in, wanting to see home prices come back down and actually wanting to see interest rates come back down, but I really don't think that you can see both of those things happen at the same time. As interest rates have been climbing, housing prices have started to cool down, and we've even seen some price reductions in some areas. I believe if interest rates continue to go up, it's going to continue to put a further strain on house prices and reduce them even further. But at the same time, if interest rates stall, if they pull back and the Fed decides to change course and pause and stop raising rates, the low inventory will be enough to bring demand back to some extent and keep housing prices up. So what does the cost of waiting actually look like? If we look back a little bit into mid-2020, home buyers were jumping in the market like crazy at that time because interest rates had gone down so much and supply was so low. There was just a lot of frenzy in the market and some buyers decided to go all in. So here's one scenario. It was a $400,000 purchase price with 20% down payment, and they got a 3% interest rate, which is fabulous. They were able to get a monthly mortgage payment of $1,350 per month. Now, at the same time, there are people saying, I'm not going to jump into this market because I don't want to compete. The prices are being driven too high. Competition is crazy. I'm just going to wait. The problem is that when competition slowed down, it was finally because rates started going up. So a lot of those home buyers are still sitting on the sidelines today for the same reasons. If you want to buy that same $400,000 home today, which you couldn't actually buy because that $400,000 home 2 years ago is actually worth $500,000 today, but say you could get that same $400,000 home today and you were financing it in today's interest rate of 7.5%, that same mortgage payment today would be $2,237 per month. That's almost a $900 difference in just 2 years. So seeing the cost of interest rates now added $900 to the price, you may say, well, home prices are going to pull back. That's what I'm waiting on. I can understand that, but let's take a minute here and talk about the numbers and what that actually looks like. So for housing prices to continue to come down even further, You have to believe that interest rates are going to continue to go up because, as we discussed earlier, there's really no world in which interest rates can come down and house prices can come down at the same time, because we know that those two are adversely correlated. Let's just say the interest rates stayed the same. They stayed where they're at the moment, and you're going to get a 7.5% interest rate. Well, in order for you to obtain or get that same payment that someone got back in 2020 on that $400,000 home, you need home prices right now to drop by nearly 40%. Now you might be saying, well, Laura, I'm seeing home prices drop in lots of areas by 10%, according to the latest data out there. And that's with interest rates going from 3% to 7%. So nearly double the interest rate for a 10% decrease in pricing. For housing to drop by another 30%, would that mean that you think inflation is going to continue to go out of control? That the Fed is going to continue to put their foot on the gas pedal for raising interest rates for an extended period of time, meaning payments would still be high, but on a lower price home? So maybe you're right by waiting. And at the end of the day, you have to do what's right for you. Don't make the decision to buy a home because someone is telling you to buy or not to buy. You should be buying a home because it's the right time in your life, or you should be waiting because it's the right time for you to wait. Maybe you're trying to save more money to make the housing payment more affordable, and you think that by waiting, you're going to be able to do that. Side note, don't forget to hook up with a good realtor and a great lender who might have sources of down payment assistance for first-time buyers, or what we call hero loans. I can understand people being scared at the moment, but I can also look at the past experiences with people talking about crashes, people talking about models that are all speculation. And when they don't come to fruition, then you have people sitting on the sidelines and missing opportunities. So let's talk about some of the pros of waiting, because there are definitely some pros to waiting. But before I do that, I want to take a quick minute to say thank you for taking the time to watch my channel, and it continues to grow because of your support. So with that said, if you haven't done so already, I would greatly appreciate a like and a subscribe to the channel. So a potential pro of waiting to buy is possibly lower house prices. So we talked previously about how the higher rates go, the lower house prices go. Now you might get lower house prices and then get interest rates to start to come back down, which would likely put a stop to housing prices continuing to come down any further at that point. That would make housing more affordable, but the real question is, how far do they go down and how far do interest rates come back? And does that create further demand then in the market, with inventory being so low that it raises prices again, with people wanting to jump back in and investors wanting to go back in? So it's hard to say that waiting might make it a little bit more affordable than where we sit today. Maybe your rent payment now is less than your housing payment would be. So by waiting, you're actually paying less money per month than owning a property. That could be an advantage for you based on how you look at it. Might be able to save a little bit more money. On the other side of that, there are some cons to looking at that with regards to waiting to buy. First one is, by continuing to pay rent, you're paying someone else's mortgage. By renting, you get no tax advantages or wealth creation. Your monthly rent payments go nowhere on your balance sheet. Yes, you get a place to live, but that's $20,000 on average at the end of the year. That's gone, and you could have put that into your own home by paying down the principal, accruing equity, and getting mortgage deductions, which is going to lead me into my next con, which is by taking more time to build a bigger down payment and keeping your money in the bank for your down payment, you're actually losing about 8% of your money's value every single year due to current inflation. So let's say hypothetically that you have $20,000 in the bank at the end of the year, and that's worth $18,400 at the end of the year. And 2 years, it's worth $17,000. So by not putting your money to work, you're actually losing money with inflation being above 8%. Another con is that we could see higher rates yet instead of them coming down. There are people at the moment that are buying properties because they think rates are actually going to continue to go even higher. If that happens, then maybe home prices do come down, but the cost to afford that mortgage is actually going to go up because the interest rate affects it even differently. People have different opinions about whether buying at a lower price or a higher rate is better than buying at a higher price house at a lower rate. I don't know. I think it's better to get a lower price house even at the higher rate, because in theory, at some point in the future, interest rates could come down and you can refinance it. Or if you wanted to pay off that mortgage quicker by making additional principal payments, it's going to be easier to pay off a loan amount when the mortgage is less than a higher mortgage, in theory. But what I can tell you in my experience is that in real estate, people make decisions based on the payment and not the price. I know some of you might argue that it's always better to have the lower price house, and I agree with that if your goal is to pay off the house. But I can tell you in my experience, most people are not going to pay off their house. Anytime they get equity, they refinance and pull that cash out for things like needed home improvements, vacations, even cars. So the big idea in their heads, and the goal might be to pay off their mortgage, but their actions don't actually follow what they're saying. That's why most people would prefer a lower payment. And that's why interest rates have such a big impact on housing affordability and demand. Some other cons associated with waiting might be that the higher prices might continue. Home prices might not actually go down that much, and while waiting, rent payments actually increase. Some people are living with family or parents right now because of surging rents, and you might see more competition later because everyone's waiting now for house prices to come back down, which is going to create more demand in the market when they do come down. So buyers that are sitting on the fence are going to rush back in once interest rates come back down, and that creates more competition in the market, again making it more difficult to get the home you want when you actually decide to buy, kind of like what's been happening the past 2 years. My goal here is to just help you understand that there are some pros to waiting, there's also some cons to waiting, and right now there's a lot of unknowns in the market, a lot of fear out there, a lot of headlines about crashes, a lot of people on multiple channels telling you it's a bad time to buy, but not actually knowing your situation. I think buying is a personal choice about when it's the right time in your life. So make sure you have reserves, make sure you are not stretching yourself, and more importantly, if you have a longer term time horizon, like between 5 to 10 years in real estate, it's not as risky as some may say.